Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. I want to welcome you back to our expert series on Tuesdays with the Lumberjack Landlord. How you doing, sir?
I am doing awesome, Mike. So excited to be here, and I gotta admit, we're gonna scratch a couple itches.
Yeah, we got our topic number one today is we're gonna give feedback on a particular video we have both watched. But before we do that, I just want to talk about what makes this channel different, right? I'm coming to appreciate that one rental at a time is different than a lot of real estate investing channels. First and foremost, I do this every day. More importantly, I give evidence several times a week, usually with property walkthroughs that, hey, I'm actually buying and selling and renting and doing all of these things. But more importantly, I realize I'm not alone and that my opinion is only one of many. So I have a series of 6 experts, Sunday through Friday, that we talk about what's going on. So we bring you real experts, real people doing this business. You have talked about 2 or 3 deals you have done. We've even talked about deals we didn't get, but we wanted, right? That's just part of the business. So I want to thank you for being a part of this every week.
Mike, I'm thrilled to be a part of it. And honestly, I am not only a expert, but a receiver of all the expertise. I mean, I watch everybody. Dickerson's on Monday, Anna on Tuesday, Omar, my fellow Tuesday dude.
Yeah.
All week long, I'm watching this stuff. Dion, it's so valuable to get other people's opinions, see what they're doing. I've been doing it for almost 20 years when I started watching your channel.
Right.
And I've still taken something from every expert.
Yeah. And again, this channel's been built on purpose. These experts, yourself included, right? You give us an hour every week. We do 3 episodes, but you still are doing the business. And
yes,
the more and more I watch other channels, I'm like, you don't even do this business. You haven't looked at a market. Like the best one for you and I is we talked about Ken McElroy calling a 40% correction when he hasn't looked at a single family home in like a decade. I'm like, what are you talking about? Let's bet some money, big boy.
Exactly.
Anyways, I digress. But we are different. And that means that sometimes we watch other channels because I like to see the opposite view.
Yes.
And there's one channel, which I'm not going to name because I was raised by a mom who said, if you can't say something nice, don't say anything at all. I probably will put the video in the comments below, but I'm not going to say the name. But this individual put out a video called The Real Estate Crash. It was out in the last 48 hours. I have unfortunately watched it twice because the first time I was so mad, I was afraid I didn't hear everything and I missed something. So I know I sent it to you because I wanted you to be ready for this. And your answer is, I've already seen it. Yep. And then you watched it again this morning. So why don't you just talk about how you were feeling after you watched it a couple of times? Because I have a whole page of notes.
Yeah.
That's how mad I am. I have a page of notes.
I was angry because I feel like he's duping everybody that watches that channel.
Yeah.
I was mystified because he clearly has not done the work.
Yeah.
I was dismayed because I think he's going to change people in their convictions in some ways. And I think maybe it's because I have no problem if somebody disagrees with me, but you just need to have some data to back it up. And
that's all I ask for is give me the data, right?
Give me data, right? I'm a total data guy. It is what it is. And I get that some people say, oh, well, data is only about the past. That's true, but usually it's trending and usually you can see some trends. But again, if you've been in the market as long as we have, we're not only basing it on where we think things might be in the next few months, where they might have been in the last few months, but how that compared to other markets and corrections that we've been a part of. We lived through it. I lived through the 2000s. I lived through 08 and all the way to 12. I lived through all that stuff. Didn't lose any property.
Nope.
Lived through it all. And am far stronger of a company now than I was then. And so am I taking some of the things that he said and going, okay, I mean, I guess maybe you can see that if you look at it this way, but I think a lot of what he said in his video was quite frankly, just dead on inaccurate. And in fact, Mike, I'm such a jerk. I actually put in his comments, I challenged him if he wanted to debate it.
Yeah. Oh, nice. I actually replied too. I think I put in a comment. Mine was much nicer. It's like, I think you're wrong. Yeah, I think you're wrong. This, that, the other thing. So you can see my comment in the string. So the first thing I want to highlight is I thought he had 2 comments that I agree with and appreciate. Again, I'll start with the good, and then I have a whole page of just what the hell are you talking about? So the first thing is he says that hedge funds make mistakes. Absolutely. Hedge funds make mistakes. We saw a lot of hedge funds go bust. We even saw a money market hedge fund break the buck last time, right? So if you invest in bad assets and the market goes against you, or you use inefficient leverage or whatever, and you're wrong, you're going to pay a price. And hedge funds are not this. Hedge funds are no smarter. They may have more data. They maybe have higher speed computers. They may have all of these things, but they're still infallible, right? They're still human beings. They make mistakes. I agree.
Yes.
As I think you would.
Yep.
The other thing he said is if rates go lower, prices will go up. I'm like, yep.
Well, so that's math. That's data. That's math.
Yeah. So I like math. I like data. And oh, by the way, I want to highlight that this channel is the one that caused me to do the 40 years of research, right? That we've talked about the last couple of weeks. Right. This guy like 2 weeks ago was talking out his ass. And I'm like, oh, I'm going to go back and look at 40 years of data because maybe I'm wrong, right? Because I didn't invest in the 80s. So I'm like, all right, let me go back and look at the 80s. And then, oh, by the way, the 90s. I just graduated high school. So, okay, let me look at the 90s. So now I have 40 years of history and he's just wrong. So, okay, those are the only two things I think he got right.
Yes, I would agree with that.
Yeah. So now we can have some fun.
Yes.
So what if, God, I have so many things that set me off.
Well, why don't we start? Can we start off with the one that absolutely was just the biggest one for you, and then I'll do my biggest one?
Yeah.
What was the biggest one for you?
The biggest one for me is he's calling a crash in 90 days. I'm like, that wasn't
mine, but yeah.
This is not crypto. This is not the stock market.
No.
So folks, again, this individual supposedly invested the last time and owned like 8 houses or something and sold them and did whatever. He probably did, but he didn't learn the lesson. So, oh, by the way, real estate in single family homes specifically can crash. We saw that last time. They can crash hard. They can crash, month after month, quarter after quarter. But let's be very clear. When we talk about the Great Recession, it took 4 or 5 years, depending on what part of the country you are in, from peak to trough. That is not 90 days, right? Real estate does not fall that fast. It just doesn't. No. And we won't see a wave. Real estate does not fall in 90 days. It might fall in 900 days. It doesn't fall in 90 days. So that one I have more, but that's the one I circled. I'm like, yeah. And again,
so the other reason that he's wrong too is when he was in it in 2008, there were 3.7 million homes on the market in 2008.
Yeah.
Now there are 1.4 million homes in the market.
Exactly. Yeah. What is it?
And do we have more people buying homes now or then, Mike? Just real quick question.
Now more first time buyers now. Yeah.
All right. Yeah. So that was your big one. So my big one was, and this one that always gets me, and because we see it in comments all the time, hedge funds are not financing these deals.
I know. What is he talking about?
They have cash. And their strategy wasn't buy and flip. He actually said that.
He did.
What a dumb statement. Oh. No hedge fund is buying houses to flip them in 90 days like house flippers on a grand scale of 7,000. No one's doing that. They're buying the asset because they know it's going to be a good performing asset with a return, not just upon selling. It's like buying a stock that has a dividend. And I'm not a stock guy, but I understand the principles. And if you buy a stock, yes, it can go up, it can go down, but if it has the dividend, it's paying you that no matter what until they kill the dividend. Real estate is exactly the same thing. The asset appreciates or depreciates over time. That's fine. I don't care. I don't invest for appreciation. I don't care. I invest for cash flow. That's what I care about is cash flow. And the only time my rent's going to get affected is if the market goes in half and rates don't follow it, because my payment's going to be the same thing as the next guy's, even if the market's in half, but the rate is double. His payment's exactly the same as mine, and I'm still going to be charging the same amount of rent.
Yeah.
That's what happens.
That was number 2 for me, because he was talking about hedge funds flipping. I actually went back and rewound it. I'm like, did he just
So did I.
I'm like, That's not what they do. Hedge funds don't flip. I don't know of any hedge fund that's ever flipped, right?
There was one that just flipped after holding for 11 years.
Yeah, exactly. They sold $3 billion worth of homes.
And you know what, Mike? They're recognizing one pattern. The pattern that they're recognizing is that single family homes over the long term will always show strong appreciation.
Yeah.
That's what they're, and they've got a ton of cash. What asset can I put it in that's going to appreciate with inflation or even appreciate over whatever time I needed to appreciate? They're in it for the long game. If it takes 3 years, 5 years, 7 years, 10 years, doesn't matter. They're still going to show return on that capital because they're getting the dividend of the renter in the unit.
Yeah. This is where his argument just falls off a cliff. Because again, I like math and I'm a numbers guy, right? So, okay, let's just say he's right. There's a crash coming. As you've just said, hedge funds are buying for cash. And oh, by the way, I did the research because I'm a data guy. The average hedge fund today is buying single family homes, getting about 6.8% yield.
Yep.
That's a hell of a lot more than, 1%, right?
Yes.
Oh, by the way, Matt, if prices go down and they still pay for cash and rents go up, because that's what happens when prices go down, because more people
the yield increases.
Exactly. The yield goes up, doesn't go down. What is this moron talking about? Okay, wait. So yeah, I just he said there's a big gash in the house. Oh, that's another one. God. He referenced Diana Olick's story about the housing market falling off a cliff, falling 20%, 6.8 months supply. Folks, that was new housing. New housing is not something a lot of us buy for rentals. They don't make sense. They're the wrong end of the.
I'd like to find the guy that buys new housing for rentals that isn't a hedge fund. Please show me that person.
I want to know that guy.
Yeah,
he's buying boardwalk. Yeah, well, in fairness, there might be a dozen, but that's about it.
Yes. I mean, there's so much wrong with what he said. Like the concept of them flipping is wrong. The concept of them needing to take out money and negative interest rates and how that affects them, wrong. The only way that it affects them is that they say, hey, you know what? Let's take some of that money and buy more assets. Yeah. Let's do that.
And then he goes on to, this is the one that really got me, that really pissed me off, is he is saying that today, because it's such a big bubble, is going to be worse than 2008.
Yes. What
did he say? He said, biggest fireworks ever, larger than Lehman Brothers. And he's talking about forbearance and all this. I mean, haven't we already had this discussion? There was 4.2, now there's 1.7, 1.5% of loans have gone bad. That's not much higher than normal times. I mean, this is
what happens when you're reading headlines. This is what happens and you know what? He's a sucker. He's a sucker. And the problem is that if anybody's listening to him and taking any of this in for financial advice, you and I know enough because we do the work. We do the research. It's based on math every single day. It's our business. We're not just talking our book. Mike, if housing goes down 50%, guess what? I've cleared a bunch of capital from a bunch of existing properties that I purposely refinanced to create a stack of cash to buy more. Even people don't listen to videos. The video that we put out last week, someone was like, he was laughing. He was like, oh yeah, so we think there's going to be a slowdown, but this guy's sitting there still buying. Yep, I sure am. I got into a different asset class that I believe is undervalued. That's how good investors do it, bro.
Yeah, just crazy. Yeah. So again, I can't. And then he said, then he says, people who buy for cash flow are suddenly going to sell. I'm like, huh? What? I buy for, yeah. He says right at the end, he talks about people who are buying for cash flow are going to sell and buy silver and crypto. Oh, well, now you're talking your book, buddy. Exactly. What I found the second time, and I didn't catch this the first time, is this individual believes all currencies are going to zero and they're going to get there quickly.
Sure.
I don't know about you, but I've never walked into a store and used scraped silver off or silver bar I own to buy groceries. I don't. It is clear to me that he is. Frankly, I think he's pigeonholed himself, and now he's feeding the audience that follows him.
Yep.
Which actually makes me feel better.
He's a crypto silver guy. Yeah, he's a crypto silver guy. That's what he is. He's a crypto silver guy.
What I've just gotten to, actually, just now, I didn't do this until we were talking. I actually feel better to now because he's not a real estate investor.
Yeah,
he's a entertainer that likes to wind people up about currency.
Yep.
I actually feel better.
Hey, if the collapse happens, it's going to happen to all of us.
Yeah.
It's going to happen to everybody.
And oh, by the way, what did I tell you I did in November of last year? I moved 1% of my net worth into crypto and I've never looked at it again. Like, okay,
Yep.
I will buy an insurance policy. Like
Sure.
10 years ago, I bought a pile of silver. And oh, by the way, I cashed it in when it was trading at whatever it was trading at and bought houses because the houses were on sale. So I do have an insurance policy, but I don't look at it every day. I don't trade it. I think I looked at it 5 times in the last 9 months or something. It's crazy.
Yeah, I was getting argued with by somebody that, because I'll actually engage people on my channel that are negative.
I don't. I delete them.
Yeah, I know.
Like,
I mean, this is why you're Mike High Road Zuber. I'm not that dude.
Yeah,
I'm not that
guy,
dude.
huh?
I'm like, let's go in the alley and have a fight. You know, and so we're having the conversation back and forth because I really want to get his view. And he's like, yeah, Bitcoin. I said, that's fine, but you only make money in Bitcoin when it's up and you sell it.
Yeah, you sell.
That's the only time you make money on that. Because I don't only make money when I sell my houses. I make money just owning them.
Yeah.
As soon as Bitcoin comes out with a dividend, we have a better conversation. But until then, we won't.
Yeah. So at the end of the day, what I want to talk about here is in episode number 2, I still believe, and I strongly believe we are in for a housing slowdown.
I agree.
Housing slowdown means supply will go up, demand will go down from where they were. It means we'll go from 1.3 to 2.6 million homes available. It will highlight inefficiencies. We will see days on market expand. Oh, by the way, we're going to go from 12 days on market to 36, whatever it is. We're going to see price drops. All of this is just us going from an abnormally strong seller's market to a more balanced market. I love slowdowns. I love changing market. I love when the media goes negative, like Diana Olick has in that one headline. But again, folks, a slowdown is not a crash.
Nope.
And but you can still find great deals. We've had 3 or 4 students just in the last 48 hours in our course talk about buying stuff under asking substantially because they did the work, they wrote a good or great offer, and they found the motivated seller.
Yeah, I just bought a house 20% under asked with cash. 20%. And Mike, not enough market deal was MLS.
Oh, folks, you're going to be able to find deals on the MLS for the next 4 or 5 months.
Absolutely.
Tax changes, evictions, all this stuff going on. But that does not mean a crash. Is that clear?
It's so true.
Yeah, I feel better. Wow.
Daily evaluation, like be in the market. And that's the best part is we're in the market. We're doing the work. All of your students are doing the work. They have their spreadsheet. They're going through it every day. They're going to start to find the best thing about a rapidly changing market is that you can find the inefficiencies of that market and you don't need to do 10 deals. You only need to do 1. And then you do the next one, almost like someone came up with a concept of 1 rental at a time.
I like that guy. That guy's really smart.
He's so sharp.
I want to be his friend. Oh, dude, this has been all. Thank you for making me feel better. I thought I was going to have to go lift heavy weights today because I was so angry. How can people find you, Matt?
Lumberjacklandlord.com, Lumberjack Landlord on YouTube, and also in the amazing 1 Rental at a Time course. It's just fantastic. I'm so honored to be a part of it. And looking forward to segment number 2.
Yeah, segment number 2 is going to be where we make a lot of money and a lot of people follow us make some money. So let's get to that one. Thanks, buddy.
Sounds good, my man. Talk soon.